We've never had before a triumvirate of bubbles that exist concurrently. So we have a record bubble in equities, a record bubble in real estate, and an enormous credit bubble too. So if you look at the total non-financial debt as a percentage of GDP in the United States, it's 265%. That ties the record set in 2008. Now there's corporate debt, there's household debt, and there's government debt, state debt. And you look at those debts outside of the banking system, they've never been higher, not in nominal terms only. They are extremely off the charts in nominal terms, yes. But even as a percentage of our phony GDP, it's at a record. We've never had a bigger housing bubble than this because if you look at home prices as a relation to incomes, I always look at things in a ratio. So I don't like you to say, well, household debt is at a record high. Well, it is at a record high, but in relation to incomes, it is not. It's about 70%. It was at 100% in 2008, but it fell to 70%. But the average ratio, if you go back prior to 1980, it was like 40% of GDP. So it's still high, but it's just not at a record high. But if you look at the housing prices as a percentage of income, a record high. And of course, in nominal terms, through the roof. And if you look at equity prices in terms of GDP, at a record high, 206% of GDP, never before seen, not even imagined prior to COVID. The average of that metric is around 90%. So you have three triumvirate bubbles, and that makes for a very precarious situation because you need a constant flow of hot air or a money supply flooding into the markets to keep those bubbles afloat. A banking system that's cranking out loans, you need a Federal Reserve that's cranking up its balance sheet. And when that stops, and it is stopping, and the liquidity begins to run dry, I think there could be tremendous problems because if you reconcile those ratios, you're talking about a 30-40% drop in home prices, a 50% drop in equity prices. What is that going to do to the banking system? What is it going to do to the economy? And I think you can answer that question for yourself. I look at debt as a percentage of federal revenue. Our national debt is 720% of our revenue. And that's pretty daunting. I mean, think about if you had a $720,000 mortgage and credit card debt, but your income was only $100,000. That would be really daunting. And then you went to the banker and the banker says, well, listen, how much of this are you paying off every year now that you've run up this mess? He goes, no. I'm adding 40% of my income to the debt every year. And the banker would even give you a lollipop on the way out of it. He would just keep laughing at you because it's ridiculous. So we have a solvency issue in this country and we have an inflation issue in this country that has not been addressed appropriately at all. I think there's a way out of it, but it's not painless. We should have a reset, really. A reset of the currency and a reset of the debt. I just don't think that's going to happen. I think we're going to continue to default on our debt implicitly, which is through inflation. And I think it gets a lot worse after this next recession, which I don't know when it's going to happen, but I know the business cycle hasn't been repealed. You can forestall the business cycle by printing $5 trillion and handing it out to people, which is exactly what we did. You won't have a recession, but you'll have a lot of problems with inflation. Inflation has been above the Fed's asinine target of 2%. The central bank should exist supposedly because they want to preserve the purchasing power of the dollar and the living standards of Americans. So your inflation rate should be 0, but it's 2, and they've missed that for 4 years to the north. The average inflation rate that they've said, which is the best rate that this country can survive on, is 2%. It's been well above 2% for 4 years. And we have a central bank that's thinking about and has been cutting interest rates. I think that's disgusting. And by the way, if you counted inflation the way they did pre-Boskin, the 80s and 90s, when they didn't have all the substitution and hedonics, you're closer to double-digit inflation than you are to 3-something%. In the core, trimmed, mean, blah, 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 you could contort and twist. You're still above 2%. It isn't anywhere near 0. And here's the biggest point. The inflation that you did create after 2020 has already bankrupted the lower 3 or 4 quintiles of Americans. They cannot afford the level of prices. They can't afford insurance and taxes and shelter and food. You bankrupted them, and now you're saying, well, it's still going higher than our 2% target. It's going, the way we calculate it, 3.3, but in reality, it's closer to 10, and we're thinking about cutting rates hopefully this year. What? Gold is very close to $3,000 an ounce, an all-time record high. And I own some in my portfolio. And of course, I advocate that everyone own 5% physical gold in their own possession. I think it's one of the best bull markets in history in gold, and I think it's just getting started. But I asked myself this question, why is that so? Because, you think about what's going on. Well, interest rates have been rising on the long end of the yield curve, so nominal rates are rising. That's normally not great for gold. The dollar has been in a huge bull market. Peace is breaking out supposedly all over the world. Ukraine, Russia, and Gaza. That's supposedly not so great for gold. And of course, Bitcoin has been stealing a lot of gold's thunder. What's the rationale? So there's a couple of rumors out there. One is that they were going to audit the gold in Fort Knox. And then Besant was on TV today saying that he can guarantee you that all the gold is there. So that was one possibility. Maybe it's just this simple, that real interest rates are falling because of precisely what we just talked about. We just said that the Fed lowered interest rates by 100 basis points since September 18th of 2024. They started with a panic 50 basis point reduction. And at the same time, inflation's going higher. And if your interest rates on T-bills and in the money markets is static or going lower, and inflation is going higher, then what is happening with real interest rates? They are falling. And that's always been rocket fuel for gold. We were going to monetize gold. So the Treasury has supposedly 261 million ounces of gold, valued at $42 an ounce. And if they revalue this gold, it would be like, I think, $750 billion. Now, the gold is the gold. It's there. This is an accounting trick from Treasury. They can say it's $0 an ounce or $1 million an ounce. The market value of this gold is $750 billion. Here's where I think Besant and whoever's talking about this falls off the rails. He's talking about monetizing gold. Does that mean you're going to sell your gold and raise $750 billion? I think that would be a terrible move, to sell all the Treasury's gold. But they want to do something else, which I think is kind of funky a little bit. They want to monetize this gold by revaluing and say, okay, gold is now at a market price. We're going to value it on our balance sheet, $750 billion. But then, magically, that's going to allow the Fed to repo the Treasury's gold and put on the Treasury general account by a couple of keystrokes, making it $750 billion, which the Treasury can then use to pay off debt. They're going to monetize gold by declaring it worth $3,000 an ounce, $5,000 an ounce, maybe much higher than that, and pay off our entire debt by printing money. Now, that's a very extreme case. I don't think it's going to happen. But could they revalue gold to a fair market value that's north of $3,000 an ounce? Yes, I think they could do that. And that would create a whole heck of a lot of inflation. If I had my druthers, I would end the Federal Reserve. There is no way that 12 voting members of the FOMC can divine through omniscience that they think that they have the cost of money. The cost of money should be a function of the supply of savings versus the demand for money. And I would like to see a market rate on that. So here's what I would do. First of all, I would say, okay, thank you for your service. The Eccles building is now locked up. I think they have like 400 PhD doctorates at the Federal Reserve. For what? To be data dependent? It's absolutely silly, right? So the base money supply, which is what the government does control. So you think about cash and Fed credit. I'm going to make that grow by 2% every year to match population growth plus productivity growth, which is commensurate with GDP growth, 2%. And then I'm going to let that real high-powered base money supply that'll be in the banking system, I'll let that rate float vis-a-vis the demand for those loans that are available in circulation versus demand for credit. And there you have a market rate based on a real money supply that's never going to be inflationary. As you know, I'm not going to reveal anything to you. The Fed's balance sheet was $800 billion prior to the global financial crisis, which was December of 2007 was when the recession officially began. And it went to $9 trillion in 2022. And the amount of reserves, bank reserves, used to be from like 1913, the foundation of the Federal Reserve, until 2007, we had about $50-60 billion. Well, that shot up to $4 trillion by the end of 2021. Can you help me get on the panel that asks Jerome Powell questions at the annual Humphrey Hawkins testimony? I would ask questions like, why do we have a 2% inflation target? And you've missed it for 4 years. How the heck did we get from $60 billion in reserves for banks to $4 trillion in reserves? And why the heck are they still above $3 trillion? And why are you only draining them slowly? Why are you talking about stopping that now because of a debt ceiling debate? Why are you destroying this country? This country's middle class has been eviscerated because of the inflation that you created. There's nothing wrong with disinflation. There's nothing wrong with a little bit of deflation. We've had that in this country before. It was our shining hour. In fact, deflation is a natural byproduct of being productive. You can sell more whatever widgets, and you can lower the cost, and more people have widgets. That's the way the economy should function. This 2% malarkey became, we have 20% year-over-year home price growth appreciation for year after year. And then we have altruistic companies like Blackstone buying thousands and thousands of homes and then renting them out to the poor, impoverished middle class, doing us a favor, supplying more homes and more roofs over the heads of the population. It's nonsense and it's disgusting, and this has to stop. I'm hoping Trump realizes it and puts an end to it.